To all you traders out there in Traderland, this is the weekend edition. Good through December 4th, 2011. Alright, here on the weekend edition, we look at the daily, weekly, and monthly charts on a few of the market indices. We're going to start off here at the S&P 500. And the S&P 500, if I pull in a lot of data here, I want you to see two sets of lines. You got the big blue lines coming in, and those are pinching together. And that's giving us what's called a symmetrical triangle. And I'm going to be bringing up some patterns here, and if you don't know what these patterns are, make sure you go to freeonlinetradingeducation.com, our website, and click on Chart School, and you can read all about them. You could even print off images of these for your own education. Second set of lines I want you to see are these blue lines. You can see the two brighter blue lines also in a symmetrical triangle coming to an apex. So these two lines are converging onto each other. Then I want you to take a look at these two parallel lines, a third set, making a bull flag, a big run up, bull flag, and the bull flag has broke out. Now because we have a bull flag and because we did break out, I think that there's a better chance of us breaking to the upside than dropping. The problem that I see with this right now is we stalled out. We didn't even get to the upper trend line or the 200-day moving average before it dropped. So for all those that took our free candlestick reversal pattern course here recently, you'll know what type of reversal pattern this is, and that is a shooting star. A shooting star is confirmed if we make a new low, and if we make a new low going into Monday, we do have a problem. We did have news come out on Friday that the unemployment rate came in at 8.6% from the 9.0%, and it beat estimates. However, the market still had a sell-off on Friday, in large part due to the worries that's happening overseas and the uncertainties of the banks worldwide. If I look down here at the MACD, we have crossed the zero line, but the histogram ticks are getting smaller, meaning that the MACD line and the signal line are starting to come together. That means there's a good chance of a crossover taking place and then dropping. If we do start to drop, this could be a nasty little drop. We could head all the way back down here to this area, which would put us around the 1175 area. So that is a significant drop if that were to happen before we would find real good support. However, there are other support areas, including the moving averages here, that we need to be watching. Now this is the weekly chart on the S&P. We had a rising wedge with these two big lines. We broke out of that rising wedge and we go into a symmetrical triangle. Another triangle here. What is bullish is we did not hit the lower trend line before we bounced. We did not get near the 100 or the 200-week moving average. We bounced before that. We came up and did a touch of that trend line and you come back down, staying below the 50-week moving average. So we are at the top of a resistance trend line. So we have resistance, we dropped. Resistance, we dropped. We're at resistance again, we should drop. However, the hope that we have here is if you look down here at the MACD, we are crossing right now with a big positive tick here to the upside above the zero line. So in this case, the weekly chart has a significant chance of going higher here. If we do go higher, we'll bust resistance here on the weekly and on the daily, so that would be good. But nonetheless, we are at resistance. Usually at resistance you get a correction heading southbound, so we're at a real crucial area. Now on the monthly chart, we're just getting started in the month, so don't pay too much attention to this little candlestick right here. But the candlestick before had a lower high and a higher low, but we did close above all major monthly moving averages. That is more bullish than it is bearish. The close happened at the upper part of the trading range of this candlestick. That's more bullish than it is bearish. We open above the 11 EMA, so it's the exponential moving average, the 11-week exponential moving average, or month, I'm sorry, the 11-month exponential moving average. It's acting as support. If it stays support, I'm starting to see a nice chance of upside potential here. However, we have a very systematic lower high and lower high. You can see that right here, very uniform. Would not surprise me to see us drop to stay in that uniformity with this higher low and then a higher low. So if I were to draw a couple lines here just to show you what it is I'm talking about, you can see how uniform this is, and perhaps we're almost there right now. Look at that. Yeah, we're at a place right now as we speak that this thing is going to want to start making a move to the upside or the downside. I think it has a better chance going higher than lower, but whew, we're right there teetering. If I go here to the NASDAQ looks on the monthly chart just like the S&P does. Let's go to the weekly chart. The weekly chart, drop, pop, drop, pop, drop. We're starting to pop again, but we have this bear flag looking type formation. If I were to get rid of just a couple lines here, I'm going to add a couple lines and draw this one here and another one. There, kind of has a bear flag type look, which could get nasty. But if I were to get rid of those two lines and then put in these two lines for the weekly, we have a nice symmetrical triangle. What's cool with this triangle right now is support, support, resistance. We're at that resistance area and we're below that trend line for the week. So we didn't make it up there, pulled back on Friday, and that's where we're at. Alright, if I go here to the daily chart, we've had a nice run above all major moving averages. We're coming up the big red 200-day moving average that could act as some as trouble here. And if I were to drop a couple lines on this one, I would see big triangle here, there's our triangle. We're at the resistance part of that triangle, so that's something we'll have to be watching for. And very quickly, let's go to the banks. The markets are only as strong as the financials. Look how far away we are from the daily 200-day moving average. So we are lagging here, kind of a bull flag type area. I'd really like to see us get over 1600 with some strength, but we are over the zero line on the histogram MACD. And on the weekly chart, we have, let's get a couple lines on here. Symmetrical triangle, we're at resistance. We need to blast through, but we're going to hit other resistance. If we go up a little higher on the monthly chart, we're below all major moving averages, trying to make a run higher, but we should have been stepping up with nice bulky green candlesticks, but that didn't happen. One thing I like to do is go to FinViz, click on groups. Once I do that, I like to analyze what's happened for the week. Financials actually did the very best for the week, which is good to have that sort of strength come into this bullish week that we did have. Basic materials did fairly well. For the month though, financials are still in the doghouse. They are way down. So we need for financials to pick up the pace and get back up to par here with everybody else. Financials for the 3 month down in the basement. For the 6 months, the bright red one down 15%. For the year down 16%. So the financials are and have been in a lot of trouble. They're trying to bounce back at least this week. We need to see some more continuation of that. I just posted something on our Grok Trade Facebook page, which if you want to stay on the latest on news and all, you want to certainly like Grok Trade. Just go to facebook.com/Grok Trade and and you'll get that information. But I posted an article that Yahoo Finance just put out, and they said that 23% of large cap managers failed to beat, or 23% of large cap managers beat the S&P 500. So that's only 1 out of 4 fund managers that beat the markets this year. That is a train wreck. And anyway, yeah, just make sure that you stay very well educated in the markets and learn technical analysis. And actually, I'm going to be doing a Meet the Mentors, kind of a private little informal online webinar. It's not even a webinar, it's just a meeting for some that are interested in knowing more about me and also the new analyst Mark Meerkat Suffren, and it is the Meerkat from MHT. We will be mentoring, and he's actually starting a great chat, premium chat room here with us, and we're in beta right now. But if you want more information on mentoring and us getting you to a whole new level of learning these markets, and it would behoove you to learn more about that. Anyway, shoot me an email at mentor@groktrade.com, and I'll make sure you get an invite for Wednesday night. Take care and safe trading this week.